Copper and Oil Options by www.optionstradingeducation.com. Copper and oil options are a useful indicator for the direction of the economy. The other day, stocks fell amid concern about the ability of Greece and the European Union in general to set the necessary conditions for a bailout of Greece before the country defaults on its debts. While stocks went down, more investors flocked to U.S. Treasuries, driving yields on a 2-year bond to a historic low. Both copper and gold futures and copper and gold options on futures fell at the prospect of a decline in the world economy. Copper is an industrial metal used in making electrical wires, industrial machine parts, plumbing, and for roofing materials. Its use goes up in a strong economy and down when the economy weakens. Oil is an essential fuel source for the industrial world. Its price rises when a strong economy raises demand and falls in a recession. In trading oil options or copper options, traders seek to anticipate the direction of the economy and the need for oil and copper. Some finely made copper products require stockpiling before use, and uses of petroleum products such as airlines trade copper and oil options in order to secure a stable and favorable price for the purchase of these products. An early sign that China was starting to lead the way out of a recession a year or more ago was the report that Chinese electrical appliance device manufacturers were ordering large quantities of high-quality copper wire of the type used in high-end computerized products. In options trading, traders will buy calls on oil and copper futures if they believe that the economy is recovering, and puts on oil and copper futures if they believe that the economy is falling. Currently, prices are falling, and those who purchase puts in copper and oil options trading have profited. The ratio of puts to calls in copper and oil options trading is also useful in predicting the profitability of stocks. ExxonMobil, the oil company, and Freeport-McMoRan Copper and Oil, who mine copper and gold, are obviously affected by changes in oil or copper demand. Delta Airlines and other transportation stocks are affected by high oil prices and a falling economy, whereas companies like Hewlett-Packard are directly affected by a falling economy. Copper at its lowest price in nearly 10 months, and oil futures fell almost 3% in recent trading. Those who believe that we are headed for another dip in the recession may be interested in buying puts in both copper and oil options trading. As the primary issue right now is the Greek debt bailout, traders in copper and oil options, and virtually everyone else, are reading about the results of a recent German election in which voters expressed dissatisfaction about the willingness of German Chancellor Angela Merkel to risk German assets in propping up what Germans see as a profligate government in Greece. Factors as wide-ranging as U.S. Federal Reserve policy and the pronouncements of both European central banks and Chinese lenders have a bearing on copper and gold options trading, both directly through the commodities markets and indirectly through stocks affected by oil or copper prices. Copper and oil options volatility are high these days due to the uncertainty of markets. However, trading options on these commodities typically helps the investor limit his investment risk, as his risk is limited to the price paid for the option in question. For more insights and useful information regarding options and options trading, visit www.optionstradingeducation.com.